have been tracking ITC, India's largest cigarette company, for a little over 15 years now. And I have seen how the company's cigarette business, its cash cow, has funded expansion into different other businesses like FMCG, paper products, hotels, agriculture, and even infotech. So as time passed, you didn't need to be a smoker to be an ITC customer. You could have been eating Ashirwad Atta at lunch, or carrying classmate notebooks, or snacking on bingo chips or yippee noodles, or checking into an ITC or Fortune hotel. Basically, ITC has expanded the brand beyond its core business. And as the brand grew, so did the demands from investors for a possible breakup of the balance sheets. And over the recent years, many of us who cover the company closely anticipated the announcement. And finally,
ITC has finally announced its much-awaited hotel business demerger.
Board has given an in-principle nod for the demerger of the hotels business.
ITC will hold 40% in this demerged entity and 60% will be held by the ITC shareholders.
Also, shareholders were expecting a clearer 1:1 demerger ratio, and since they are not getting one share against each share that they are holding, they are clearly disappointed.
but the announcement turned out to be an anticlimax of sorts, or kind of a party spoiler. The ITC stock had been hitting a record high week after week. It was in fact the best performing Nifty 50 stock, up over 70% in the last 1 year. In fact, on the day of the demerger announcement, the stock was kissing distance from the record 500 rupees mark. And for a while, it claimed Hindustan Unilever's position as India's most valuable FMCG company. Its market cap had crossed over 6.1 lakh crore rupees. But that glory turned out to be short-lived. The ITC stock closed 4% lower that day and further dropped 2% the next day, effectively eroding around 50,000 crore of market cap, as the scheme of demerger did not go down well with the company's investors. So what was it about the demerger that irked the investors? Was it simply a buy on rumors and sell on news kind of a thing? Or is the shareholder feeling shortchanged with the scheme? Why is ITC holding 40% in the demerged entity? Why was it not a clean 1:1 split like Reliance did in case of the Jio Financial Services? And how other large businesses of the conglomerate will be spun off? For answers, I turned to a recently retired CEO of ITC Hotels, Deepak Haksar.
Market probably felt that we are going to cut the umbilical cord. That's not true. It was never meant to be that way. I don't know why they feel. People have this huge, ab to bilkul ho gaya. I think they look at things very short term. ITC is a long-term stakeholder. For a new company, it is a source of great strength to be part of ITC.
We also get to hear from one of ITC's anguished shareholders, Manu Rishi Gupta, a wealth manager who is also at loggerheads with the company due to his critique of them.
Nobody is the Maibap of the company. You think you can run this company if this was an Ambani company or a Adani company? ITC can be a great business for a shareholder, but they just have to start performing in line with their peers or better than their peers. As simple as that.
It's Friday, 28th of July, and I am your host Kiran Somvanshi from The Economic Times. This is the Morning Brief. ITC, earlier known as the Imperial Tobacco Company of India, is unique in many ways. It is one of the oldest companies in India, having been incorporated in 1910. Also, it is one of the very few large conglomerate structures in India that is still remaining intact, and most importantly, it has zero promoter holding. The London headquartered British American Tobacco, or BAT, is ITC's largest shareholder, holding 29% in the company. ITC had become a meme stock during the pandemic for not budging from around its 200 rupees level, even as Nifty doubled from 8,000 to over 16,000 levels during that 2-year period. And during this stuck zone, the calls for split got louder.
We always had this feeling that, we are not listed and Taj is listed and others are listed. And so we could never sort of benchmark against that. We were always somewhere in the segment of ITC. And I think time has come when we need to show who we are and the strength of the organization.
That's Deepak Haksar, the former CEO of ITC's Hotels division, who retired just 3 years ago after working with ITC for 42 years. Tell me the history, like how did it all start with, like why ITC got into hotels in the first place?
Yeah, it's an interesting story. When Mr. Ajit Ryan Haksar, the first Indian chairman of ITC, and he was the one who really sowed the seed of the diversification at that point of time, he envisaged and said, let's get into an area which would be able to serve national priorities and it could provide value to the nation. If you recollect the 75, when we had the first hotel, there was a shortage of foreign exchange. It was something that was direly needed. So he said, okay, let's get into tourism and hospitality business. You can earn foreign exchange. Let's contribute to the tourism and hospitality landscape and infrastructure. And then obviously it made a lot of sense because it also required a lot of capital and ITC did have the capital to invest. And there were not very many players at that point of time. 3 established players. One was obviously ITDC. Then you had the Oberoi's East India Group and then the Taj. So those hotels were well established. They were strong brands at that point of time. So that was the time in 75 that we said, okay, let's get into the hospitality business.
ITC opened its first hotel in 1975, the ITC Chola in Chennai. And from that one hotel, ITC in nearly 50 years has grown to 120 hotels with over 11,600 rooms. Now, over the years, the company forged tie-ups with international hotel brands like Sheraton and Marriott for their global distribution strength. In fact, getting into the hotels business was the first major diversification that ITC forged outside of its cigarette business. And it will be the second time for ITC's hotel business to get listed. Hotels was a separate company from ITC and was listed on the stock exchanges between 1993 and 2005, after which it was delisted and moved back into the ITC fold.
I think there is a journey 2000 onwards, in which 2004 we merged back. But 2000 onwards, Mr. Deveshwar had started sort of saying, listen, we need to sort of push the envelope. So before 2004, when we merged, we had almost about 4,000 rooms. That's not very much. And we were all over, actually. We were in leisure segments. We were in metros. Mr. Deveshwar, along with the management team, strategized that we need to be known as a premium luxury hotel chain. We need to accelerate our expansion. And we need to focus on our business travelers. In 2000 to 2023, we came up to almost 17, 18 hotels, just to let you know. That was the pace at which we built. Mr. Deveshwar was such a visionary man. So he said that I am the investor. I am putting in this kind of money. The brand must be synonymous with ITC. So, we then decided that we'll prefix the ITC hotels.
So ITC Hotels currently operates under 6 brands.
It's like a pyramid. Right at the top, you have the ITC hotel, which is in the luxury space. Then you have the Welcome Hotels, which is in the upper upscale. Then you have what is called Fortune, which is in the mid to upper scale. And then you had Welcome Heritage, which is neither here nor there. It's unique in its own identity. Because how do you compare a palace or a Haveli or a royal home, whether it is in unique locations, etc. And what has happened in the last 3 years is also very interesting phenomenon because we added 2 more brands that gives depth and support. Because ITC needed another 2 to be able to get, as part of his asset-light strategy, more people to come in also. So Momentos came in as a luxury lifestyle brand. So it's in the luxury space. But it allows owners to come in very effectively. Similarly, in the story, which is in the upper upscale space, so you had more brands that allow owners to step in.
When I compare ITC's hotel division with other listed companies, I feel that probably the pace could have been better or could have been faster. What is your sense that had ITC hotel division be a listed company as a standalone and facing the competition and the shareholders and the stock markets, would there be more pressure to kind of grow faster and be in line with the growth of its peers? Or it did well being part of this whole ITC conglomerate? What do you think?
I think at that point of time, it was absolutely vital. We would not have been able to expand because you needed a lot of capital infusion. And we've seen that how organizations, and we've seen how what happened to Leela, huge debt on their books, not able to service it, delays in projects. ITC, the hotels division didn't have to face any of this. All the hotels came in our internal accruals. We did not have the pressure on debt because ITC that sort of was investing. There was a vision. And believe me, there was a lot of people who said that, why are we investing this kind of money also?
Exactly.
Why are you doing this? Why? What is the purpose? But I think it was, again, this intrinsic belief in a strategic objective and the belief that we need to come up with a hospitality brand that will play in all segments of market and be leaders in the premium segment or whichever segment it is. And with that objective in mind, we said we need to first do it in India before we even go out. There were a lot of pressures. Oh, we should go here, we should go there, we should do this. We said, no, let's do it first. Let's be the king in our own country. So I think if it hadn't been, we would not have spent that kind of money and built these great, grand hotels. And while there is a criticism that, oh, your return on capital employed is low and should, well, of course, that was the pressure that we all had to undergo. And yet we had to deliver. Hotel takes time to recover, get into the positive zone. There is a huge investment. Before it gets gestated, it takes about a year or 2 years. And then as it gets older, it gets into the positive zone. The return on capital employed for that hotel also becomes very positive. So therefore, those pressures were always there. That why would you put money here? Why would you not put money somewhere else? But when you're building a brand with a stated goal and objective in mind, then you need to pursue. You can't leave it halfway because either will you be here or there. This day would not have come if we had not taken those decisions. Let me put this way. And today you can see that the return on capital employed has bumped up substantially because most hotels are now in the positive. The larger hotels are all firing on full cylinder. And with the asset-light strategy in the annual, as the new CEO had said that, we're going to have 20 more management contracts in the next 2 years, that will further help in the improvement of the return on capital employed. And as these very hotels, some hotels came in 19, some hotels came in 18, some hotels came in 17. As they grow older, you will find that your return on capital employed is going to get better and better.
But despite all this, the hotels business is still pretty small in the bigger scheme of things for ITC, the conglomerate. Hotels contribute less than 4% to the company's overall revenues and under 3% to the company's overall profits. But it uses up over 18% of the company's capital investment. This number was over 32% just 3 years ago. This stokes the debate between valuations and brand value.
Have you been to a Chennai hotel? Have you been to a Kolkata hotel? They're absolutely masterpiece. They can't be replicated. You can only dream of them. You had 4,000 craftsmen working to create those unique identities in ITC Grand Chola. ITC Moria has the largest collection of contemporary art. People come to ITC Moria to look at Raza, look at Hussain, look at Padapati, look at Satish Gujral. Name it if they are there. It's a living organism, breathing, bringing alive the unity and the diversity of India in our hotels. Yet bound by a common vision of ITC, hallmark of excellence in whatever it does.
I'm really tempted to ask here that can this at all be captured in the valuations? The kind of real estate that ITC is sitting on, the kind of art that ITC hotels have. Do you think this will be captured in the valuations once it gets listed?
We don't know, Kiran, what valuations and what they're going to do. I know for sure that this is going to move. Wait and see. Let it get listed. market is going to acknowledge the brand. A brand that has been anchored on sustainability. 3 hotels are today net zero carbon certified, and 10 more are going to be. They've been acknowledged globally as exemplars. We don't do lip service. 60% of energy comes from renewable sources. It's a very big thing. And I know that this has taken us 10 years of hard work to do this. It's not easy to have all hotels LEED certified. It's not easy to have net zero carbon hotels.
Do you think, having been benefited by being part of the ITC umbrella, can the hotel business now be independent enough to be separately listed, be separately managed?
Absolutely. And this is right time for multiple reasons. One is that I think our project stage activities is practically over, at least for the time being. Most hotels have now been launched and have established. I think we have reached a stage where we can sort of really chart our own destiny.
So what explains this 40% stake being retained by ITC in the listed company?
As you know, I'm not privy to the actual thinking of why 40, why not 30, why not 20. I mean, those kind of things I will not like to speculate on. But the fact is that I think market probably felt that we are going to cut the umbilical cord. That's not true. It was never meant to be that way. I think they look at things very short term. Oh, ye to bilkul aaya, ye to wo to maza nahi aaya because I'm not getting the thing well. I don't think so. We look at it from that way. ITC is a long-term stakeholder. This listing also gives ITC hotels access to new partners, new collaborators, test the market, debt market or equity or whatever it is. All that will happen. It's very lame and short-sighted and foolhardy for people to sort of look at it, oh, it was not as expected. And I do believe that ITC will continue to play a role in its future growth, at least, which is good. And this is how it has done, by the way. I mean, if you're saying that, oh, but this is not, well, Tatas have done it, Reliance does it, East India hotels do it. So everybody does it. So it's not that ITC is an outlier.
If I look at the kind of money that ITC has poured into the hotels business and the EBITDA margins of the hotel business, do you think they are likely to improve going ahead, the EBITDA margins? And now with that money not coming in from the parent, do you see being a detriment for the business?
No. EBITDA margins were low at a point of time. But if you see now, they are, because, hotels go through that cycle when you have to first break even, then you need to be cash positive, then you start making profit. And over a period of time, as you gestate, you get a better return on capital employed. So it takes time. So, margins also get impacted. As a big hotel opens, there is a huge depreciation that takes a hit. It erodes your profitability for the initial years. So all that till you start making money. So most of that phase is over. So if you see the margins, they're already moved from, let's say, 16, 18, 20 to 30 right now.
And even if the investment doesn't come in from the parent the way it came in the past?
The investment is not required in that sense because we are not making any hotels. We've already done the hotels. The next 5 years, I don't see much of CapEx being spent. So I don't see that as a hindrance at all. In fact, it's a great time to be in because, you have a brand new car, running smoothly, firing well. The drivers are doing well. Now go and win the race.
While the race has been timed well to coincide with the overall recovery in the hotels business, but winning the race may not be so easy. The market leader is Indian Hotels or IHCL, a Tata Group company and the holder of the Taj brand. Now, IHCL posted a record profit of over 1,000 crores in the financial year ending March. The company has over 260 hotels with over 22,000 rooms across 11 countries. And they open a new hotel every 3 weeks in the year. In effect, IHCL is double the size of the ITC hotels and is more profitably run. And therefore, not all are gung-ho about the prospects of the ITC's hotels division. In fact, ITC has been quite a polarizing stock in the Indian investor community, capital misallocation being the biggest grudge. I reached out to wealth manager Manu Rishi Gupta, founder and CEO of Bangalore-based MRG Capital. Now, Manu is an anguished ITC investor and has been vocal about his observations on the company's capital allocation in his blogs, for which he is also facing legal action from the company.
I am an investor in ITC. And to be honest with you, I absolutely love the company. And I think since I'm a value investor, I've been holding the shares for the last 6 or 7 years. And I have gradually increased my position in ITC as well over a period of time. And it's a substantial part of my portfolio. And until about 2 or 3 quarters back, I had more shares in ITC than some of their top directors and executives.
So, as an investor of ITC, what are your broad observations about the company?
See, while most of the data and the numbers behind all my intentions are in public domain, and it doesn't require too much of rocket science to really figure out how the company is being managed. And all of this is evidenced in the return ratios, operational performance, and everything. Had it not been for the cigarette division, which is a real cash churner over the longest period of time, because you can call it a sin industry or you can call it a sticky business. And because the barriers to entry are also rigid, you're just having a great run and then destroying shareholder wealth in all the other divisions year after year after year. It is a promoter-less company managed by a handful of 16, 17 board members. Each of them is above 65 years of age, way past their retirement. I mean, I can confidently say everyone's having a ball. Look at the number of crorepati employees in their company, considering when you compare it to other parameters of other equally sized companies generating equal revenues. I mean, ITC is definitely being run as a government organization, and the shareholders have continuously suffered.
Despite diversifying into non-tobacco businesses for over 50 years now, cigarettes still contribute 75% of ITC's profit and over a third of its top line. So despite being a conglomerate, ITC's bottom line is still essentially shaped by cigarettes.
When you compare ITC's cigarette performance compared to other cigarette companies globally, they don't have an edge. They're just like that. The operational metrics. So I would appreciate if at least in one area, they are outbeating their peers. They are not. So they are not outperforming anybody on any parameter. So obviously there's something wrong in the company, right? There's something wrong in the way it is being done. But because it generates so much of cash, तो उनके सारे पाप धुल जाते हैं.
As you said earlier, if the cigarettes business can stand alone and not kind of eroded the shareholder value by putting money in other businesses, now, if you look at the demerger, that's the first step they have taken towards doing that. So how will you look at that step?
Firstly, I think it's imprudent to call it a demerger. A demerger, in true sense, is when you truly demerge a company. This is not a demerger. This is just, in my opinion, an accounting jugglery, because ITC still has control. The main board of ITC still would end up controlling the so-called demerged entity. You have technically reduced the voting power of the 3 largest shareholders, which is BAT, LIC, and SUTI. So you have disempowered the minority shareholder. And somewhere, that you might still have to continue to deploy capital, because hospitality is such a capital-intensive business that for them to complete their existing projects, I don't know what is the status of the Sri Lanka hotel, in which they've already dumped some 1,900 crores. I mean, just for the record, ITC makes the most expensive hotel room of a finished hotel in the world in the hotels that they own. So where is the logic behind that? And if you are making the most expensive room and making the largest capital investment, are you able to command the highest average room rate in the industry? Are you the most efficient hospitality chain in terms of EBITDA percentages? Do you have enough leadership team that can take this chain and expand it the way IHCL has performed in the last 5 years? And on top of that, you're not even matching the efficiency parameters and operational parameters of all the other chains in the country or the world. Compare your operational metrics to IHCL, or compare yourself to Lemon Tree, or compare yourself to Chalet. Okay, you've enjoyed infinite capital. You are a debt-free company because the cigarette division has funded your growth. And because of all these head starts and advantages, you have been able to build the best hotels in the world. Now, they should operate like the best hotels in the world. They should command the best premium as the best hotels in the world. And their efficiency metrics and parameters should be like the best hotels in the world. Now, if that check boxes are ticked, then I'm a very, very happy shareholder.
So can you take us through these exact numbers that you have been kind of hinting at in terms of comparison when you compare ITC hotels division with other listed hotel players?
So ITC's revenue, of course, is way, way lower than IHCL's revenue. The revenue of IHCL 2 quarters ago was nearly close to 4,500 crores, IHCL. And I think ITC was not even 2,000 crores, less than half. ITC generates average room rate of close to 7,000-8,000 bucks. The entire chain, across the chain. Taj Hotel is generating an ARR of 18,000 rupees at this instance of time. And this was financial year 20. Talking of EBIT, Taj was nearly, IHCL was nearly 1,000 crores and we were only less than 200-300 crores. So that's not even 50%. So similarly, in subsequent years, ITC, the hotel division, has only underperformed compared to the peers. So neither are we matching in growth that we are doing, nor are we matching in the EBITDA catch-up. In my last vlog, I have just kind of made a very logical mathematical statement that the hotel assets, as per the book, are 7,500 crores, right? Now, assuming that this asset has depreciated at 12% per annum for the last 10 years, the real capex made would be close to 27,000 crores. If this 27,000 crores in the last 10 years was just invested in some treasury yields, in some very, very basic business that generates 13% IRR, which any business can, technically the value of that capital destroyed would have been 50,000 crores. 50,000 crores in hotel division alone. I mean, who runs a business like that? And why doesn't anybody really take the board to the task or the senior management to the task?
So do you think the markets will now take the company to the task once this division gets listed into a separate company?
Well, the market has already given its judgment because obviously 50 rupees of nearly 10% wealth has been destroyed. This demerger is just an eyewash. BAT's voting power and all the minority or the majority of the minority shareholders, the large minority shareholders, their voting power stands reduced. Tomorrow, if FMCG is also demerged with 40% ownership with ITC, if the agri division is demerged with 40% ownership with ITC, you have technically defanged all your minority shareholders forever, and you've got a free run. So that's voting power stands reduced, LIC's voting power stands reduced in these divisions, and you can continue to do what you're wanting, and you are still the owner. You still have a say. Otherwise, let the free market decide what should happen to a truly demerged division.
Like you are an investor, and if had you been heard, what would have been your suggestions to the management?
If you knew how to run hotels, you would have already run them by now. I was a kid when I used to see the main iconic Moray Sheraton on the Sardar Patel Marg in Delhi, right? And at that point of time, that was the only hotel that was seen along with the Taj Palace. So if you knew how to run a hotel division, you would have already started running it by now, right? Your operational metrics would have been there. If you knew how to run a FMCG division, you would already be beating Nestle and Hindustan Lever and Britannia in operational metrics. So on the contrary, you know how to sell cigarettes. You know how to make cigarettes, right? So sell your hotel division to somebody who knows, because they've got great assets. Realize some value for your shareholders, sell it to Taj, sell it to a global chain. Somebody will pay you a premium for it.
And globally, we have seen that, right? Tobacco companies or cigarette companies have divested everything else besides cigarettes.
Absolutely. Recently, you bought one advertising company called Milo for 400 crores. Now, 400 crores is a drop in the balance sheet of ITC. But hello, you're buying a minority stake in an advertising company and you call yourself as the 5th largest company in the country. Why can't you hire the topmost brand building or a digital marketing company and pay them a regular revenue-based or a revenue-attached fees for whatever you're trying to achieve?
Why, according to you, this has happened over the years? Why this whole thing about not being conscious about spending that money?
Because nobody is the Maibap of the company. You think you can run this company if this was an Ambani company or an Adani company? Put your hand on your heart, Kiran. Aristotle made a very, very profound observation, but for the fear of judiciary or oversight, everyone is an animal, right? So there is no check on the board at all. That has been consciously kept out through shareholding jugglery over the longest period of time. And till 2 years back, I think BAT voted out that resolution. They were giving such fantastic and liberal ESOP grants that with every ESOP grant, the voting power of BAT was coming down. Let's ask the right questions. Let's start comparing the performance of ITC in every standalone division in a silo with all the other peer groups.
ITC's management did answer some probing questions on the analyst call yesterday.
What is the likely impact of the demerger on ITC's financial ratios? So if you look at segment ROCE, with that ratio to my mind should improve by 18 to 20 percentage points. Of course, these are based on FY23 numbers. The actual numbers will obviously be struck when we get the approvals and do the actual accounting entries. But ballpark, I think 18 to 20%. Apart from this, the overall return on invested capital or ROIC, that number we expect to improve by 10 percentage points. How do you think that this demerger would be a win-win for both ITC and ITC Hotels?
As far as ITC Hotels is concerned, I think as a pure play entity, it positions itself well to pursue the asset right strategy and chart out an accelerated path. It continues to enjoy the institutional support of ITC so that the operations can be stabilized. It has access to the goodwill and the brand assets of ITC. This company will have a very strong balance sheet, a debt-free balance sheet with very strong assets of something like a few thousand crores. It is doing well from a profitability perspective. But should there be need to raise capital, I think it has a strong balance sheet to go to the market, raise capital if it wishes to. It can also raise capital by way of equity or other investors who may be interested. ITC is concerned, first of all, I think it definitely improves the return ratios for ITC. It also continues to provide access to ITCs with the synergies through the ITC Hotel. And let me also add, this structure is being designed to benefit existing shareholders rather than any future shareholders.
If you could just help us how you thought to the 40% stake that you're going to hold in this company, why not hold a lower stake which could also give you control but give a higher discovery of market value to a larger proportion of investors?
As far as the 40% point is concerned, I think the objective is for the new entity to thrive and grow in a much faster fashion than it's been in the past. So it needs to be given stability, it needs to be given access to all the goodwill, the brand assets, the domain expertise for its growth and success. It needs to give a lot of comfort to all the stakeholders, whether the partners, the employees, and at the same time, this structure enables it to go, as a pure play, independent entity managed by its board with undiluted focus in the segment in which it is operating. It can grow on a much faster pace. So to give us that kind of flexibility and putting all these factors into mind, giving us some headroom for growth also, this is what led us to this arrangement that we have got of 40%.
The stock market often serves to be the best and loudest indicator to a company's management. This month, we saw the merger of the HDFC Twins and the demerger of Reliance Jio Financial Services. In both instances, the announcements sailed through with the stock market. It's time ITC's management picks up the cues from what the market is trying to tell it. So that's it for today. This is Kiran Somvanshi from the Economic Times. And you are listening to our decoding the demerger of ITC Hotels, only on the Morning Brief. A special thank you to our guests Deepak Haksar and Manu Rishi Gupta for sharing their amazing insights. This episode was brought to you by sound editor Indranil Bhattacharjee and producer Vinay Joshi. Executive producers Anupriya Nair, Anirban Chaudhary and Arijit Burman. Thank you for listening. If you like this episode, do share it on your social media networks. A new episode of the Morning Brief podcast drops every Tuesday, Thursday, and Friday. Don't miss it. It streams on Amazon Prime Music, JioSaavn, Spotify, Apple, and Google Podcasts. And of course, ET's own audio platform, ET Play. Have a great weekend ahead. All clips used in this episode belong to their respective owners. Credits are mentioned in the description.